Nifty. Laurence Balenco is now joining us of CLSA. Laurence, good morning. Good to have you with us here on the program. Thanks very much. So has the picture gotten a little muddled? What is your view on the Nifty? Let's begin there.
Yeah, so I think the time frame is quite important because in the short term, yes, we're getting this corrective price action. We basically saw the September highs momentum slow as we made new highs for the Nifty, and we've seen a correction unfold. We have slipped below the 50-day, so there is downside risk to the first big support level at 19,100 to 19,200, and then the June breakout from the 2-year trading range, which sits around that 19,000 area. So we're in this short-term correction, but it's worth bearing in mind if you take a step back and you look at that longer-term structure, the breakthrough that 19,000 area, that ended 2 years of ranging action, and you've got longer-term upside targets towards 22,800.
Short-term correction that you're expecting, where there's a downside risk to 19,100 on the index. Laurence, hi, good morning. Which are the sectors or stocks that you think could take the market to that level in the near term on the downside?
Yeah, so definitely the banks come into risk. That had been a big outperformer from the 2022 lows into June this year. And then you've seen the relative price action of the banks roll over. The absolute price action, if you look at the Nifty Banks Index, you'll see it on the screen there, double top pattern. So there is another 5% downside risk, and that's the likely sector to take the market back to at least that 19,100 area. Longer term, it is a sector that we do like, but that's where the short-term risk is in pause coming through with this market.
Hi, Laurence. Earlier we were talking about a level of 20,980. Is that target still on? Closer to around 21,000 odd on the upside. Now, you've given us the downside levels, but on the upside, Where do we trend to?
Yeah, absolutely. So 20,900 is still the shorter term upside target. But like I say, if you take a step back and you look at the longer term breakout from that 2-year pattern, you can get up to 22,800. So that's the point here. You need to be patient. There is a correction unfolding. And we think the levels of 19,100 and worst case scenario down to that 19,000 area are levels to accumulate, but you don't need to rush in right now as we work through this correction.
So, and that's the worst case, Laurence, or you think it can get, because of how global markets, etc., are looking, it can get lower than that, lower than 19,100, 19,000 levels, because that's about 2% from here.
Yeah, that's right. I mean, I think we've run into some liquidity risks on global markets. You could see an undershoot for those levels and a potential break of 19,000. But as we see it currently, there's more of sort of rolling corrections, sector rotation that's going on more than these Delta 1 or highly correlated corrections that we saw, back in 2007, 2009, and through the COVID side. It's been more rolling corrections, the price action so far.
Okay.
How are US indices looking, the Nasdaq and the S&P?
Quite interesting. Nasdaq's still holding above the August lows, as well as its 200-day moving average. So that's sitting around the 14,600 area. And if you look at the S&P, yes, we did close below the 200-day on Friday, but there is a shelf of support at the 4,200 area, which is the upper boundary of the trading range that you saw in the first quarter. So again, Nasdaq has been outperforming. You've seen some short-term correction there. Again, you've seen rotation going on, but it looks like more trading range price action and correction within those ranges.
Just one final question before we let you go. In your note, you do mention that TCS and L&T Technology are presented as buy candidates. Is that your assumption for the entire sector? I mean, do you like the IT sector now? And are these your top picks?
Yeah, it's quite interesting because that is a tactical rotation trade. As the banks correct, you get this rotation and relative outperformance in the RT side. So I think that is more tactical than longer-term breakouts. Again, the longer-term breakouts, I think, still come from the banks ultimately, but in the short term, that's where we've seen the action. So yes, it's a rotation trade back into tech, which has underperformed. TCS has corrected back to the 50-day. It's bounced off that post its results. And LT Tech, the same scenario. We've seen this recent pullback, but longer term, you had a breakout there. I mean, the other space that I think is vulnerable in the near term through this correction, where we've recommended taking profits and you're rotating to larger cap, is in the mid cap space. It's been a great outperformer year to date. Recently, we broke below the 20-day, which stopped the upside acceleration that you've seen in that market. So we do think there's some underperformance coming from that mid cap space that suggests you should take in some profits and look for a better level around the 36,000 area on the mid cap space.
All right, Laurence, we will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. So that's Laurence Balenco saying that there is a short-term correction that the market that he's expecting in the market. The downside risk is at around 19,100, but after that passes, there will be a 22,800 target that he has on the Nifty. So in the near to medium term, the market uptrend is intact. Let's take